Welcome to TalkTickers. We're your shortcut for getting up to speed on important earnings calls.
Yep, and today we're diving into DTE Energy. Just had their Q1 2025 call.
That's right. We'll pull out the key numbers, the strategic updates, basically everything you need to know from what folks like Jerry Norsea, Joy Harris, and Dave RDS shared.
Okay, so let's jump right in. DTE started 2025 pretty strong. Operating earnings hit $436 million.
Which works out to what per share?
That's $2.10 per share for Q1. And, looking forward, they seem quite confident.
Confident how?
Well, they're guiding towards the higher end of their 2025 operating EPS range. That's $7.19 to $7.23. That's roughly 7% growth over their original midpoint for 2024.
Okay, 7% growth in long term.
Long-term target's still holding at 6% to 8% EPS growth, using that 2025 original guidance as the new base. For utility, that's pretty solid growth.
Definitely noteworthy. Okay, so a good top-level view. Let's break down the segments. How did DTE Electric do?
All right, so DTE Electric. Their earnings were $147 million for the quarter. Now, that's actually lower than Q1 last year.
Oh, why is that?
It's mainly down to tax timing, specifically investment tax credits linked to a couple of solar projects. Also, higher rate-based costs played a part.
But wasn't that anything positive?
Oh, yeah. Definitely offsets. They had rate implementation kick in, weather was cooler, which helps demand, O&M costs are down, and renewables actually chipped in more earnings.
And the tax timing thing?
Yeah, that $67 million impact. They expect that to reverse out over the course of the year. So it's a Q1 dip, but shouldn't affect the full year in the same way.
Oh, okay, got it. Timing noise, basically. What about DTE?
Gas had a really good quarter, $26 million in operating earnings. That's way up from Q1 2024.
What drove that big jump?
Mostly favorable winter weather, more heating demand. And again, rate implementation helped, offsetting that a bit where higher O&M and rate-based costs, but still a strong result.
Okay. And DTE Vantage?
Vantage also saw a nice increase, $39 million in earnings.
Right.
Big drivers there were higher renewable natural gas, or RNG, earnings.
RNG, how much?
Well, part of that RNG boost was $15 million just from the 45Q production tax credits.
Ah, the carbon capture credits.
Exactly. Plus, their custom energy solutions business did better too.
And energy trading, how did that segment perform?
Energy trading came in at $34 million. They mentioned strong margins on their contracted and hedged physical power and gas deals.
Solid. Anything else segment-wise? Corporate and other?
Yeah, corporate and other was favorable, again, partly due to tax timing, though higher interest expense offset some of that. And just like the electric segment, that timing effect is expected to wash out during the year.
So summing up the results, electric had some timing headwinds, but gas, Vantage trading all looked pretty strong.
That's a fair summary, yeah.
All right, let's shift gears a bit. Beyond the financials, what were the big strategic themes? I know reliability is usually a focus.
Absolutely. Grid reliability is front and center. They're putting serious money into improving it. The goal is ambitious. Cut power outages by 30% and slash outage time in half.
Within what time frame?
Within 5 years. And they're already seeing progress. They said investments in 2024 resulted in a 70% improvement in time customers were without power.
70%? Wow.
Yeah, and they're claiming another 60% improvement just year to date in 2025.
So what are they actually doing this year to keep that momentum?
Well, the plan for 2025 includes installing 600 smart reclosers. Those are the devices that can automatically fix some outages. 950 miles of pole-top maintenance, replacing 5,500 poles. And this is a big one, trimming trees along more than 6,500 miles of lines.
Tree trimming is always huge for reliability.
It really is. Basic blocking and tackling, but essential.
Okay, so massive investment. That leads right into the rate case, doesn't it? How are they planning to fund this?
Exactly. They filed an electric rate case. A key part is seeking to grow their IRM, the infrastructure recovery mechanism.
The IRM, right. That lets them recover costs for pre-proof upgrades more smoothly.
Precisely. They want to ramp that up from $290 million this year to $1 billion by 2029.
$1 billion? That's a big jump.
It is. But they're tying it directly to that reliability push. They mentioned a recent electric distribution audit confirms their plan will actually improve reliability.
So they have some external validation. What's the total requested increase and what does it mean for customers?
Total request is $574 million. They estimate it works out to about 44 cents a day for the average residential customer. And they stress that total bill growth is expected to stay below inflation.
Okay, so framing it as an investment in better service while trying to manage the bill impact makes sense. What about the clean energy side?
Still a major focus. They're committed to cleaner generation, big investments planned in solar, wind, and battery storage.
How much renewable capacity do they have now?
Over 2,300 megawatts currently in service. And the plan is to add, on average, about 800 megawatts per year for the next 5 years.
800 megawatts a year is significant scale.
It really is.
Yeah.
And they've also locked in the investment tax credits for these renewable projects through 2027, which, definitely helps the economics.
Right. Those ITCs are crucial. Now, something that caught my eye was the mention of data centers. What's happening there?
Yeah, this is potentially a really big deal for them. They've signed non-binding agreements for, get this, 2.1 gigawatts of power demand for data center projects.
2.1 gigawatts, that's huge.
It is, with 3 different parties. And they're talking to others, like hyperscalers and co-location providers too.
Can they even handle that kind of demand?
Well, they say they have about 1 gigawatt of excess capacity right now, so they feel pretty well positioned to serve at least a good chunk of this initial demand.
What's driving all this interest in Michigan for data centers?
A big factor is estate sales and use tax exemptions specifically for data centers. That makes Michigan more attractive financially.
So this data center load, is it baked into their current financial plan?
No, they're treating it as potential upside to the current 5-year plan, which makes sense given the scale.
Any specific examples of this growing demand?
Yeah, they mentioned the University of Michigan actually increased its planned demand within their agreement from 100 megawatts up to 220 megawatts.
Wow, even existing large users are scaling up. This could really reshape their load profile.
Could be transformative, yeah.
Okay, staying on potential impacts. What about tariffs? Always a concern with big capital plans.
They seem relatively unconcerned, actually. They estimate their exposure is maybe 1% to 2% of the capital plan.
How come so low?
Well, they said about 80% of their plan involves service providers, so it's not directly hit by tariffs on goods. For the rest, they've been proactive working with domestic suppliers, building up some inventory.
So managing the risk.
Seems like it. They also mentioned, sort of as an aside, that the recent tariff relief on auto parts is good news for Michigan's economy generally.
Which ties into the broader economic picture in their territory. How's Michigan doing?
Looking pretty positive based on their comments. Southeast Michigan is seeing significant investment GM. Henry Ford Health, U of M, as we mentioned.
Any hard numbers?
Yeah, Q1 indicators versus last year look decent. Housing permits up almost 10%, real estate GDP up 2.6%, payroll jobs up nearly 1%, and importantly for DTE, customer count, both residential and commercial, is up over 0.5%.
So a generally healthy economic backdrop. Good to see. Let's circle back quickly to DTE Vantage and energy trading. Any updates there?
For Vantage, the strategy seems to be shifting a bit more towards utility-like investments.
Sure.
Focusing on things like central plant service contracts.
Yeah.
The existing RNG and carbon capture stuff is just progressing under the IRA rules.
And trading. You mentioned a strong start.
Yeah, really strong. $34 million earnings in Q1 alone against a full-year guide of $60 million. That strength, driven by their contracted and hedged positions, might continue.
Could that provide some extra financial cushion?
Potentially, yeah. Could support investments elsewhere in the business if that strength holds up.
All right, let's wrap up the deep dive with the regulatory side. Always critical for utilities. What's new?
Okay, key update is the Michigan Public Service Commission's order on performance-based rate making, PBR, that came out in February, takes effect in 2026.
PBR, so rewards and penalties based on performance?
Exactly. Incentives and penalties are capped at $10 million either way. DTE seems okay with the metrics chosen and feels their current performance lines up well.
What about their renewable plans? Any regulatory hurdles?
They recently filed their Renewable Energy Plan, or REP. They say it aligns with their bigger Integrated Resource Plan, the IRP. They expect an outcome on the REP filing soon, but aren't anticipating major changes to their strategy based on early signs.
Any other regulatory points? Battery storage, coal retirements.
On batteries, they noted storage is definitely in the plan, but they haven't made big purchases yet. That gives them flexibility maybe on managing costs if tariffs become an issue there. They also sounded encouraged about the EPA's Section 111D potentially being rescinded. They think that would help the economics of building new gas plants.
Does that change the coal retirement timeline? Like, for Monroe.
Maybe some flexibility, but ultimately those coal plants like Monroe will need to be replaced eventually. It's more about the replacement economics.
Got it. And those 45Q tax credits for Vantage.
Projects are online, yeah. They booked $15 million in Q1, which is a good chunk of the expected $50-60 million for the whole year.
What about their credit metrics? FFO to debt.
On a trailing 12-month basis, they said funds from operations to debt is at 15%.
Okay. And that big IRM ramp to $1 billion, how are they justifying that to regulators?
They've proposed a 3-year ramp up. They're using circuit-level reliability data and pointing to that Liberty audit we mentioned as support. Their hope is getting the $1 billion approval might mean they can go longer between full rate cases.
Interesting angle. One last regulatory bit, the RNG tax credits. Any uncertainty there?
Rulemaking is still ongoing, but DTE expressed, optimism. They seem confident the final rules will be favorable.
Thinking way ahead. Data center tariffs.
Yeah, it's not needed now because they have that excess capacity, but they are starting to formulate ideas for a potential data center specific tariff for future needs, especially if new baseload generation is required.
How would that work?
The goal would be to protect existing customers from stranded asset risk if a huge data center leaves. So likely involve long-term contracts, minimum volume commitments, that kind of thing.
Makes sense. And tax equity.
They mentioned they have existing commission support for using a tax equity structure at the utility level should the rules around transferring tax credits ever change, sort of a backup plan.
Okay, that covers a lot of ground. Super helpful breakdown of the call. Now let's pivot to our This Is Not Financial Advice segment. Based on everything we've discussed, what's an outrageous but plausible trade idea bubbling up?
All right, outrageous but plausible. Given DTE's huge push into renewables, right? They've secured tax credits, they have aggressive build-out plans, and those coal plants will eventually retire. So how about this? A long position in a broad renewable energy ETF, something like ICLN or TAN, combined with a simultaneous short position in a coal-focused ETF, maybe like KOL used to be or whatever equivalent exists now.
A pair trade on the energy transition itself.
Exactly. You're basically betting on the long-term trend that DTE is actively participating in renewables up, coal down, both within their footprint and, more broadly. It amplifies that specific narrative.
Playing the macro trend reflected in DTE's strategy. Interesting. Plausible, definitely. Outrageous, maybe a little, depending on timing. Okay, second idea.
Second thought, focusing on Michigan's potential tech boom. We talked about the massive data center interest, the tax breaks, the general economic development buzz.
Right, that 2.1 gigawatts of potential demand.
So maybe consider a long position, perhaps in DTE itself, but also maybe a basket of Michigan-based industrial or even real estate companies that would directly benefit from all that infrastructure built out in increased economic activity driven by data centers and the supporting ecosystem.
Kind of a regional growth play spurred by energy demand.
Yeah, betting specifically on Michigan capitalizing on this tech wave, with DTE being a key enabler and beneficiary, alongside other local players in construction, logistics, real estate, you name it.
Another interesting angle, focusing on the ripple effects of that energy demand.
Exactly. Again, just ideas, food for thought, not recommendations.
Absolutely. Always remember, this is purely informational, definitely not financial advice. You need to do your own homework and consider your own situation before making any investment decisions.
For sure.
So that wraps our deep dive into DTE Energy's Q1 2025 earnings. We hit the financials, the big strategic plays on reliability and clean energy, and that really interesting data center potential in Michigan.
Yeah, lots to unpack there. Reliability investments, the clean transition, and that huge potential upside from data centers seem like the key things to watch.
What stood out most to you listening in? What do you think about DTE's path forward with the grid upgrades and this data center opportunity? We'd genuinely love to hear your thoughts.
Join the conversation. Let us know.
Thanks for tuning in to TalkTickers. Stay informed, stay curious, and we'll catch you on the next earnings call breakdown.